Welcome back to the channel, everyone. Today, you are about to learn 25 of the greatest investment lessons ever written in one single video. Yes, this video summarizes the book 25 Investment Classics, a collection of insights from the most powerful, timeless, life changing investment books of all time. You don't need to read hundreds of pages. You don't need months of study. In the next few minutes, I will give you the core lessons that top investors use. Warren Buffett, Benjamin Graham, Peter Link, John Bogle, and many more. So stay till the end because this video can literally change your financial future. Let's begin. Value investing: buy great companies at the right price. Benjamin Graham, the intelligent investor. Price is what you pay, value is what you get. Always invest with a margin of safety. Don't be emotional. Beating the market requires patience. Seth Klarman, margin of safety. Avoid risk first, profits later. Investing is 90% discipline and 10% calculations. Benjamin Graham and David Todd. Security analysis. Study financial statements deeply. Earnings stability, debt levels, intrinsic value. Never buy companies you don't understand. Bruce Greenwald, value investing. Value stocks outperform over the long term. Buy companies with consistent cash flow, not hype. Key takeaway of section: even the world's best investors succeed because they buy undervalued companies and wait. Section 2: growth investing: finding companies that will explode in future. Books One Upon Wall Street, Common Stocks and Uncommon Profit, The Gorilla Game. Peter Link, One Upon Wall Street, written by Peter Link. It says, invest in what you understand. Look for companies growing earnings 15 to 25%. The best investments are often around you in daily life. Philip Fisher written Common Stocks and Uncommon Profits. It says steady management quality. A great company compounds for decades. Focus on long term potential, not short term price. Christensen Reiner written The Innovator's Solution. It says disruptive companies start small but become giants. Find forms solving problems in a new way. The Gorilla Game, written by Geoffrey Murray. It says invest in companies that dominate a new technology category. Example Google in search, Apple in smartphones, Nvidia in AI. Key takeaways: growth investing is about identifying the future winners early and holding for long. Section 3: Index investing, the most reliable way to build wealth. Books: The Little Book of Common Sense Investing, A Random Walk Down Wall Street. John Bogle, The Little Book of Common Sense Investing, tells most people should invest in index funds. Low cost index investing beats most active investors. Bhutan Malke written A Random Walk Down Wall Street says markets are unpredictable. Instead of trying to time the market, stay invested. Key takeaway: if you don't have time to analyze stocks, index investing is the safest, smartest way. Section 4: Investor Mindset. Win the game in your mindset first. Books: Thinking Fast and Slow, The Psychology of Money, The Most Important Thing, Fooled by Randomness. Daniel Kahneman wrote Thinking Fast and Slow. It says human brains make emotional, biased decisions. Slow, rational thinking builds wealth. Morgan Housel written The Psychology of Money. Wealth is not about intelligence, it's about behavior. Save consistently, be patient, avoid lifestyle pressure. Howard Marks wrote The Most Important Thing. It says, understand market cycles, control risk. You can't control returns, but you can control risk. Nassim Taleb wrote, Fooled by randomness. It says, luck plays a huge role in investing. Never assume success means skills. Protect yourself from uncertainty. Key takeaway: mindset is more important than stock picking skills. Section 5: Lessons of investing, their secrets. Books: Poor Charlie's Almanac, Buffett, The Making of an American Capitalist, Market Wizards. Charlie Munger wrote Poor Charlie Almanac. It says focus on lifelong learning, avoid stupidity first. Smartness will take off itself. The big money is in the waiting. Warren Buffett wrote his biographies. Buy great companies, not cheap companies. Invest for 10 to 20 years minimum. Reputation and management matters most. Jack Schwager wrote Market Wizards. Great traders follow strict rules. They never risk big money on one trade. They love risk management more than profit. Key takeaway: discipline plus patience separates legends from average investors. Section 6, Macro Economy and Big Pictures Thinking. Big Picture Thinking. Books. Stocks for the long run. The Big Short. The Essays of Warren Buffett. Jeremy Siegel wrote Stocks for the Long Run. Equities outperform every asset class in the long run. Short term volatility doesn't matter. Michael Lewis wrote The Big Short. Markets can be irrational for long periods. Long periods. Steady bubbles. Avoid herd mentality. Warren Buffett wrote essays. It says own businesses with competitive advantage. Avoid debt heavy companies. Think like an owner, not a trader. Section 7, Trading and Technical Approaches. Books. Reminiscences of a Stock Operator. Market Wizards. Trend Following. Edwin Lefebvre. Reminiscences of a Stock Operator, written by him. It says prices reflect crowd psychology. It was never by thinking that making the big money. It was my sitting. Michael Cowell, Trend Following book he written. It says trends last longer than people think. Ride the wave. Don't predict the wave. Key takeaway trading requires discipline, not prediction. Section 8, Business and Entrepreneurship Insights. Books. The Outsiders. Competitive Strategy. Good to Great. William Thorndike wrote The Outsiders. It says CEOs who allocate capital wisely create the most wealth. Look at how businesses reinvest their profits. Michael Porter wrote Competitive Strategy. It tells a company survives only if it has a moat. Competitive advantage like brand, patents, cost leadership, etc. Jim Collins wrote Good to Great. It tells great companies stay disciplined. They focus on what they can be the best at leadership and culture drive long term success. Final takeaway section. Here are the five biggest lessons across all 25 investment classics. Always control risk. Don't lose money. Buy great companies and hold for decades. Understand what you invest in. No blind bets. Behavior and patience matters more than IQ. Wealth grows slowly than suddenly. So, this was the complete summary of 25 investment classics. These are the same principles used by world class investors for decades. If you found this video helpful, do like, share with someone who want to learn investing and subscribe for more finance and investing summaries. See you in the next video and remember investing is simple but not easy. Stay disciplined, stay patient and stay invested.